Hey traders. Have you ever seen the market hit a key level, only to reverse instantly, leaving you scratching your head? That, my friends, is a liquidity sweep. And today on LutaMarkets, we're going to break it down in simple terms and show you how to trade it like a pro. We'll go over what it is, how to identify it, and most importantly, how you can profit from it. Stick around because this information could change the way you trade forever. Let's get into it. Alright, so what's a liquidity sweep? It's when the market moves towards a key price level to grab liquidity, things like stop losses and pending orders, before quickly reversing. Essentially, it's a tactic used by the market to stop out traders before making a real move. Big institutions and smart money often take advantage of this to manipulate the market in their favor, leaving retail traders on the wrong side of the trade. Think of it like a fake out. The price drops below a support level, traps sellers, then shoots up. That's a bullish liquidity sweep. Or, the price spikes above a resistance level, grabs by orders, then tanks. That's a bearish liquidity sweep. The market does this all the time to trap retail traders. These moves are designed to deceive, but once you understand how they work, you can use them to your advantage. So how do you spot liquidity sweeps before they happen? Keep an eye on these key signs. Equal highs and lows. These are prime liquidity zones, meaning they often contain clusters of stop orders. Markets are drawn to these areas like magnets, making them perfect targets for liquidity grabs. Stop order clusters. The market moves toward areas packed with stops before making a sharp reversal. These are often found at key psychological price levels where traders commonly place orders. Fake breakouts. A quick move beyond a key level, then a snap back inside the range. If you see price break a level but fail to hold, you might be witnessing a liquidity sweep in action. Volume spikes. Sudden volume jumps near liquidity levels often signal a sweep. When a large amount of trading activity occurs at key zones, it often means liquidity is being absorbed before the real move begins. Reversal candlestick patterns, pin bars, engulfing candles, and long wicks at liquidity zones are key indicators. These patterns suggest rejection of price levels and can signal a sweep. Market timing. Liquidity sweeps often happen during the busiest trading hours, like the London and New York session openings. During these times, big players enter the market, and liquidity sweeps become more common. If you can spot these clues, you'll avoid getting trapped and start trading with the smart money instead of against it. And trust me, that can make all the difference in your trading results. Recognizing these signs can help you get better trade entries and avoid unnecessary losses. Now, how do we trade liquidity sweeps? Here's how to do it for both buys and sells. Pay attention, because this is where the money is made. Buy trade setup. The market is in an uptrend. You want to make sure that the general structure of the market is bullish before considering a buy. Price dips below equal lows, triggering stop losses. This move stops out retail traders who were in long positions too early. It quickly reverses back up, reclaiming key support. This is the smart money stepping in to drive the market higher. Enter a long trade with stop loss just below the sweep and target the next resistance. Make sure your risk-to-reward ratio is favorable before entering the trade. Confirmation tip. Look for strong bullish candles after the sweep to confirm the reversal. A solid engulfing candle or a pin bar rejecting the liquidity zone can provide extra confidence. Sell trade setup. The market is in a downtrend. Just like in a buy setup, you want to ensure that market structure supports your trade. Price pokes above equal highs, triggering stop orders. This move takes out early sellers who had tight stop losses. It reverses hard to the downside, rejecting key resistance. This signals that smart money has absorbed liquidity and is now ready to move lower. Enter a short trade with stop loss just above the sweep and target the next support. Again, risk management is key to ensuring long-term profitability. Confirmation tip. A strong bearish engulfing candle after the sweep can signal a strong down move. The larger the bearish candle, the stronger the selling pressure. It's really that simple. But remember, always confirm it with market structure before jumping in. If you enter too early, you risk getting caught in another sweep. Be patient and wait for the right setup. Rushing in without confirmation can lead to losses. Now, before we wrap up, here's an important tip. How do you avoid getting stopped out by liquidity sweeps? Use wider stop losses. If you place your stop too close to key levels, you're an easy target for a sweep. Allow some breathing room so your stop isn't an easy target. Wait for confirmation. Let the market show its hand before entering a trade. Patience is crucial when dealing with liquidity sweeps. Avoid obvious entry points. If a level looks too obvious, chances are, it will be swept before the real move starts. Institutions take advantage of obvious price levels, so be cautious. Pay attention to time of day. Sweeps often occur during major session openings when liquidity is highest. Trading outside of peak hours may reduce the likelihood of getting caught in a sweep. If you apply these strategies, you'll start avoiding unnecessary losses and increase your win rate dramatically. The key is to think like the big players and anticipate their moves rather than reacting emotionally. Now you know exactly how to spot and trade liquidity sweeps like a pro. But this is just the beginning. There's so much more to learn about smart money concepts and market manipulation. The more you study these techniques, the better you'll get at trading with precision. If you found this video helpful, smash that like button, subscribe to LutaMarkets, and hit the notification bell so you never miss a trading edge again. I'll be bringing you more insights and strategies to help you navigate the markets like a professional. Got questions? Drop them in the comments below, and I'll personally go through them. Also, let me know what trading topic you'd like me to cover next. Let's grow together and dominate the markets.